Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the charts for XRP. See what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe. Tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you have not yet joined us in Discord, links in the description down below. Fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. If you're looking for a little bit more from the crypto space, whether that's bear market strategies all the way through to project reviews and trading, why not check out the Patreon services as well. The links in the description below. Okay, let's get into this, right? So here we have XRP paired up with USDT. We're on the hourly chart and Binance is the data source. Last time we spoke about this, we were talking about 54.4. We actually came down here and just gone a little bit lower than that, and these things are actually pretty standard in the space. You tend to find that you go down ever so slightly, over wicking the expected lows or highs, and sometimes they actually fall short. So for example, sometimes you could argue that you would fall short here rather than going down to the 1-to-1 ratio, the 1-to-1 ratio being 54.4 and obviously slightly over wicking down to the 1.236 right there at basically 52.69. Okay, and you're starting to see a little bit of green now. I think the market is about to potentially get a bit of a reversal here, so I'm going to just drop this back down. Okay, so we've bled out relatively significantly and we're about ready for another bounce to the upside. In fact, I will just remove those. I don't need those now. Essentially what we had here though was this move. So as we can see, we're pushing down. This is a 1-to-1 ratio. This was taking us to this 54.4, right? Now obviously we can see that we came down ever so slightly lower. If I just put a horizontal line in here, you can kind of see that we're just there on that 1.236 at 52.82, and we just wicked below even that one ever so slightly. So, you know, from a perspective here for XRP, we were coming down. There's nothing more to say. We didn't hit a 1.382. We haven't gone to 1.618 or anything like that. Though that is possible, and we should be open to the idea that we might see, you know, some more discounted rates here for XRP, because I don't think necessarily the correction's completely over yet. But that's kind of marking a good place for a bounce. Okay. So we should be thinking that there's going to be some kind of bounce moving on up. Now, what I'll do is I'll bring up the stochastic RSI. Here we can see that we are oversold on this hourly chart. And we take a look at the 4-hourly, oversold, the 8-hourly, oversold, the daily. We've actually got a little bit more room to go. So this is where I'm thinking we're probably going to see a bounce, lifting up the 4-hour, the 8-hour stochastic RSIs, and then drop back down again. Now, it doesn't necessarily mean that we're going to drop down massively, but I would be really focusing in on around this 51 cent range, just kind of get a double bottom. And again, for those who do not know, double bottoms are, or triple bottoms for that effect, are basically like bull signals to a degree. And basically, when you hit the same level of support multiple times, you end up actually bouncing up quite strongly from there. So the importance of these low ranges are quite apparent. Now, as I said earlier in the month, maybe even in April, we're talking about this E wave on the daily chart and how it can be unpredictable. Okay, it can be short, it can be long, and here you can see how it's broken out of this trend line to the downside. Now, what you don't want to do is misunderstand or misinterpret that trend line. That trend line there is only really there to support the A wave and the C wave. It does actually have no bearing on this E wave. It can completely break down. Now, a lot of people, if they don't follow Elliott wave theory or anything like that, will basically assume that you've broken down here, you're going to go down further. But I would actually expect to bounce up higher than this trend line, and that's not to be confused as a confirmation that we're done with this low area. Instead, we should look at the bounce as exactly that, a bounce up before potentially pulling back down another additional time. As I said, right, I'm kind of thinking a double bottom is probably going to come in down here at around that 51 cent, 51.04 for this E wave. It might even go down lower than that. I've spoken about it before, though it's not, you know, highly likely at this stage. It is possible that in the future we are actually dropping down below 50 cent for XRP. Okay, that's a possible scenario, but for the most part, I think it doesn't matter too much unless you're throwing in, you know, hundreds of thousands of dollars into XRP as a long-term investment, and in which case, you know, you want to make sure you maximize your percentage gains on there. Now, if you're throwing $10,000 or even less than that into XRP, then really dollar cost averaging anywhere where we are right now is going to be a pretty good idea, in my opinion. Obviously, I'm not a financial advisor. I can't give you financial advice. It's just my personal views and opinions. But when you're throwing in, a substantial amount of money, you need to make sure that the price is about right for you, because you're going to get a lot more for your money when you're talking about throwing in hundreds of thousands. However, if you're following in tens of thousands or less than 10,000, for example, you're not really going to get a huge benefit from seeing it drop down from, let's say, 51 to let's say 48 cent, right? There's not a huge amount of coins that you're going to benefit from that. There'll be a certain amount, obviously, but it's not going to be a huge life-changing amount, for example. So you kind of put things into perspective, start to think about the retracements that we've had, and start to think about where you might want to start dollar cost averaging and starting to load up into the market, okay? Because this is, as I said previously, with VeChain, Harmony One, and many on our live AMAs with members, these are the points where we are talking about, maximum amount of value, right? At 74% retracement. Now, obviously, I know that many people in the space will say that you can pull back down into like 85, 90% even retracements. I don't see us coming down all the way to like a 90% retracement zone, taking us to 19 cent XRP. Long gone are the days where we can see 95% retracements, I feel. And that is specifically because of the amount of adoption that we have in the space. Plus, the history now tells us that after dropping down into these bear market lows, hodlers have actually performed incredibly well long term, so they just hold on. So the narrative to sell, it really isn't there from a hodling perspective. Obviously, if you're using leverage and you're going to get liquidated, that's on you. We don't promote leverage or talk about leverage on the channel here, simply because you're not in control of those assets. You can get a margin call and be liquidated out of the market. Whereas if you were to buy and hold and actually, hodl that asset, like XRP, essentially you're in control over when that sells, and you can hodl through all of these kind of really difficult times and actually build on your position and basically build a much bigger stack of coins or tokens ahead of the next surge to the upside. So although this E-wave is volatile and there's potentially downside due here, unless we're throwing silly money into it, I think we're really splitting the hair at this point, and we are talking about a big reversal coming. So for those who maybe aren't familiar with the channel and what we've been talking about, I'll just zoom out ever so slightly here. Here you can see we have the XRP. Let me just get rid of that as well. Elliott wave triangle, which is basically our B wave. Okay, so this is basically A, B, C, D, E. This is a triangular pattern. The E wave within that pattern is unpredictable. It can be long, it can be short, etc. And for the most part, I think we're getting there, but we do need to see a little bit more of a downside, I feel, before we can see that surge upwards, but we'll see how that goes. Essentially, we are talking about the March 2020 lows riding up into the April highs, and this being just short of $3, I think. Let me just check. Oh, no, just short of $2, sorry. And just short of $2 there, then we pull back down into this triangular wedge. Now, these wedges, this particular triangular pattern here, these are very specific patterns, okay? This only appears in a B wave or a wave 4, okay? There's only two places in all of charts that you will ever see these. So if you see an Elliott wave triangle, it has to either be a wave B or a wave 4. Either of those are going to tell you two things, right? If it's a wave 4, we'll expect a wave 5 afterwards, and if it's a wave B, we'll expect a wave C afterwards. Obviously, it's different structures to those, okay? One is trend-based and one is corrective-based. Now, this is a corrective-based pattern. Okay, A, B, and C is corrective. It is not a trend. Okay, so we know that we're going up, but it's not a trend that we're going up in following. Okay, so ultimately this means that the trend that led into this, which was, of course, a downward market, it could potentially be what happens afterwards, right? So we hit that C wave high. Okay, so we want to keep these things in the back of our heads here because we need to understand what the importance of these things. Okay, and the fact that there's a corrective pattern and we have a B wave triangle, which means we are looking to move up here into a C wave high, which at the moment is indicating to us $9.97. However, if that E wave does go down into those 40-cent ranges, then we will have to pull this Elliott wave triangle will have to be just adjusted with our fibs here, and then basically what that would indicate to us, so if we drop down here hypothetically to 42.15, this is basically going to be telling us that we're going to go into $8.21. Okay, so these two things relate or they correlate together very, very well. So we should be cautious over how low this E wave goes, because it will have an impact on how high our C wave can go as well. So right now we want to be, open to the idea of dollar cost averaging, because we are talking about, I think at this point it's actually more than 16x's. Where are we now? 17x's. Okay, so you can 17x on XRP at the as it stands at the moment, but it might be, significantly different depending on what happens with this E wave going down lower. So just keep an eye on that. There's going to be some fantastic gains here. Dollar cost averaging anywhere around between kind of like, that's going to be really broad and it's awful, I have to say it, but between kind of like 40 cent and 50 cent to me just makes a lot of sense, right? As we start thinking about where we're going with this E wave. Eventually this E wave will get confirmation of reversal, and it should be an impulsive breakout. So we are looking for 5 waves out of here, okay, and it's going to be pretty big and impulsive in its nature. So we're waiting for the confirmation. We can of course take advantage of the wave 2 if we were to miss it. So sometimes it's also a good opportunity if we're not open to the risk of buying into an E wave, seeing the pullback here, is to kind of wait for the wave 1 to happen. Do not FOMO into the wave 1, instead buy the wave 2 low after the wave 1 high, okay? And this will basically allow you to pick up on wave 3 and 5 and know that they're actually outside of the triangle and the market has picked up. So there's lots of different strategies, lots of different ways to look at it. So if you want to know more about that, check out the Patreon services below as well. We kind of go into a lot more strategy-based stuff down there. But essentially, we are looking for an impulsive structure out of this Elliott wave triangle. The only thing we don't really know is 100% is where this unpredictable wave is likely to end. So we're watching all of those micro movements on the hourly chart to hopefully find the good point for reversal. So as I bring that stochastic RSI in, we know that we've got some downside here, but we are in a really good spot on our weekly at last, which is good. And of course, the monthly is also oversold. So essentially, we really just need to bring that daily down so that we can have that really big surge to the upside. Now, it's not essential that we pull it all the way down, but I would prefer to have it in a really good position ahead of that big push to the upside. So guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.